How do you think things are going to reopen tomorrow? Dumb question almost, but yeah.
Yeah, so the Hong Kong markets were still pretty strong during the holidays, up 8 to 10%. So we think that suggests A shares will open up with some positive momentum. But really the China holidays was a chance for offshore and foreign investors to kind of catch up to the onshore sentiment that was really leading the rally prior to the holidays. We think some A-share sectors could open with particularly strong momentum. For example, if we look at the best performers in Hong Kong last week was the China non-bank financials, or more specifically the brokers, which were up 50 to 100% in just 3 days. So, a lot of these stocks are dual listed A and H shares. So, this gap up in the share price difference will likely converge once the A-share market reopens.
And there seems to be still some skepticism, right? I mean, given the run-up that we've seen, Marvin, some managers globally are still not convinced about this rally. I think Nomura even calling it brace for a potential crash as well. So how much do you think are foreigners really kind of buying in on the story now?
Yeah, I think the Hong Kong market performance last week was a good indication that foreign investors are buying in. But based off of some of our client conversations, we do think there's still a healthy amount of skepticism amongst global investors. And, this is reflected in the short balances as well. If we look at the short positions in the onshore market versus offshore, the onshore market has come down much faster than the offshore market, which kind of reflects the difference in sentiment between on and offshore investors. The other thing we'll be looking at is the northbound Stock Connect flows. Now, this is reported on a quarterly basis. We'll get data on that in the coming few days, and we expect to see some pickup towards the end of third quarter.
And Shuli, I'll bring you in. There's, I guess, a fair amount of investors that may have missed the rally. They've decided out. They want to see where this settles and goes. Your latest piece talks about how investors should be looking at this rally at this point in time. Yeah, just take us through the thinking there.
Well, they have to, because the China market has caught up to the U.S., right? And we see that the U.S. momentum easing off. And then if global investors want to beat the benchmark, they have to look at China. And unfortunately, before this crazy rally, they pretty much exited China entirely. Like shorting China and the long U.S. big tech are the two most popular trades. And you can have their investors, the pension funds, mutual funds, etc. They will ask, the China stock equities are not expensive despite the recent rally. It's only trading at 11.5 times forward earnings, half of what S&P 500 is trading at, right? So they do have a dilemma whether to chase after this rally after the initial 30% rebound.
Yeah, and does it spark some sort of re-rating, right? You're saying China is reshaping the world in investing. In what sense?
Well, in China, there is no a slow bull as President Xi Jinping has been hoping for. It's just a 0-1 switch on or switch off rally. And then China is, after all, the world's second largest economy. It affects foreign exchange, commodities, and everything. And we just suddenly, even when you talk about the U.S. Federal Reserve's rate decisions, are we in a reflationary period, in which case the Fed cannot even raise rates further anymore, right? That's a problem with investing in the world, even if you want to do ex-China, because you cannot ignore this big elephant in the room, which can be sleeping for a long time and suddenly waking up.
Yeah. Marvin, you and your team have been very busy, I would imagine, during this, 3-4 week window. What are some of the most common questions you're getting from clients these days?
Well, it's really, how much longer can this go? Is this time different? As Shuli mentioned, valuations now 11.5 times. It's really approaching the 5-year average, and we're kind of going into this territory where it's going to be about show me. Right. It's going to have further index gains are going to have to be backed by earnings and fundamentals.
Shuli, that big meeting tomorrow. We were talking just this morning about, do you actually need an actual big number in terms of a fiscal package to get this rally to continue, or we need to look for more nuances?
I think if the rhetoric is good tomorrow, my expectation, they're having the 10 a.m. meeting, right? And a lot of retail investors are scrambling to open stock market accounts.
Yes.
So I expect the Asia to basically go 10% or whatever. And then if the rhetoric is strong, Asia market can still rally because we know like the Chinese onshore market is kind of like India's. It's very momentum and retail driven. We've seen that before, right? So not necessarily the concrete numbers that we need to see. It's just a rhetoric. I think it's more important.
And maybe a question for both of you. Marvin, I'll start with you. I mean, over the weekend, we were looking at social media, and it seems everyone is looking ahead to the reopen. People are opening up their brokerage accounts. The state media is reporting that they're ordering the exchanges to test their systems and run some tests today. Will the systems be able to cope with this flurry of buying activity tomorrow?
Well, the Shanghai exchange failed a week ago, so hopefully they've done enough testing and are prepared for today. Yeah. So,
Julie,
I think the employees at those brokerage firms are just so happy they have work to do right now.
True. Yeah, I think they were what? They were swarming the streets, I think.
Yeah, sitting on sidewalks.
Media, getting people to open some stock accounts.
It's a good problem to have.
Yeah, I'm sure they're getting a lot of traction as well.